Afternoon. How is everybody doing? Afternoon. Who have we got? Fletch, David, Reverend, Roger, Neo, Virginia, Church. Afternoon. Danny, Vitali, how are you all doing? Hello, hello, Paul. So, Friday. No, it's not. It's Thursday. It's a weird non-farm payroll day because we normally have this on a Wednesday, but we've had it today. So yeah, we'll see where we go today. We've had not much happening today actually on the indices pre-market. I was expecting a little bit more movement. Go away, or don't buy your silly pen. A little bit more movement off of the news today, but we haven't had anything. So yeah, very flat so far today. That was the news. As you can see, it's basically just a whipsaw off the news. So nothing much exciting happening as yet. So we should get some decent breaks at the open. However, we've got the PMIs coming out at 3 o'clock. So if we do get a break at the open, I think it'll probably be a break and stall or a break and retrace, because we've got some fairly impactive news coming at 3 o'clock, which is half an hour after the market open. So we'll see how it goes. We've also got crude oil this afternoon as well, which normally comes out on a Wednesday. That's also normally 3:30, not 4 o'clock. Not quite sure on the logic behind putting it backward half an hour, but it is. So this morning, quickly cover this morning's news before the market opens. We had Bullock speaking, not a lot of action there at all. We've had non-farm employment change, which came out down. The previous was 111. We were forecasting it to go up, and it's ever so slightly dropped. So we had a weakness in the US dollar, and then unemployment claims came out as forecast, and they undid it. So no movement. That's why we've had a whipsaw today in the market, because one was positive, one was negative, or one was as expected, and one was negative. And that is a precursor for tomorrow's non-farm employment change. So the forecast as today was an increase, or is an increase. So there is a possibility of that having being a negative tomorrow, which will obviously have a negative impact on the US dollar tomorrow. The unemployment rate is also forecast to come down. So if that comes out as a 4.3 instead of a 4.2, we could have a nice downward movement on the US tomorrow. They have come out and as well and said there's a high probability of a 0.5% drop rather than a 0.25% drop. So any negative news is going to very negatively impact the US at the moment. So we might get some accelerated movement tomorrow. We've got obviously the CAD unemployment rate coming out tomorrow as well at the same time. So a lot of volatility there. Today's main volatility has actually been on the Canadian dollar. So if you look at the ADR dash today, New Zealand CAD, Euro CAD, and Aussie New Zealand. So the Canadian dollar basically moved the most off the back of that news on the US today. So very big, strong move on all Canadian pairs today. So not quite sure why they bothered to move the CAD on that news, but they did. So that's undone itself completely. Look, the Euro CAD. So that was an ADR hit. Good luck getting into that one. So we basically spiked up on the news, hit ADR, and retraced exactly back to where we started. So 5-minute rally up, 5-minute rally down. So you've just had a reversal alert short, so ignore that one today. And New Zealand dollar CAD, that one is up there at the moment. I've actually got a short running on my other platform on this. I really like this because of two reasons. First is it's an ADR hit to the upside. We've just taken out yesterday's high. We've got this high here, and we've got the previous day's high here. The previous day's high is that previous support here, which broke and retested again. So we know this is a really good level. So I've actually just taken a short on this at 84.015, which is somewhere around there. Basically, it's shorted it at 84. And I'm going to take a second entry at previous day's high if we get to it, which is there, which is 84.135. So I'm short from round about there, and I'm going to take a second entry as a scalp there. And just looking for a pullback, basically an intraday pullback play, because we're obviously extended. We'll be above 125 ADR on that. So obviously the CAD will probably move on the PMIs this afternoon. So we've got the services PMIs coming out, so that might move it. But quite like that one as an ADR reversal, just because of the level here. And as you can see, this is a previous level we've been interested at previously as well. So it's a good, strong support resistance area. Likely we'll get a reaction because we're extended on the day. Be good if we can get there before the services PMIs come out, actually, because obviously if they come out as a positive, that's going to drive the US. That will also drive the CAD, which will bring that back down again. We're not quite there yet, so I'm just going to keep an eye on that one. So the only other ADR we've had today is Aussie New Zealand, which was an ADR to the downside. That's a double bottom bounce straight out of propulsion again. So good looking long opportunity, not extended on ADR though. There's nothing much on ADRs today. Stuff's kind of getting there, but not quite. So there's nothing really alerted me today of any excitement levels. So we'll have a look at the weeklies in a sec. Afternoon put DJ AZ news was crap. Yeah. During these news events, especially the US dollar and possibly interest rate change, do you keep the EA running on H4 RSI extensions? Yeah. I leave the EA on all the time. So news basically is what is your friend. Every news event we get, regardless of whether it goes your way or goes against you, is a good thing. Unless it's a fundamental shift we're not expecting and you're the wrong side, then obviously it's going to take you into drawdown for a bit. But you want volatility. The reason we make money as traders is because the market moves up and down. The market moves up and down on news. So you don't want to turn anything off when the news events happen, because if it pushes in your direction on news, happy days. If you're short on something and it pushes on news, happy days, because you get to take a second entry, bring your average down, it's extended and more likely to pull back. Yeah, so news is always a positive thing, unless they say we're going to change the interest rates and we didn't tell you about it, in which case then there might be a fundamental shift which catches you offside. Nothing you can do about that. But yeah, always keep the EA on all the time. You can't turn it off if you're in something like I'm in pound. I took a pound US dollar long yesterday on the US dollar news. So yesterday's news was negative on jolts. The interest rate came down on the Canadian dollar, which will weigh a little bit on the US. So everything yesterday was negative for the US. We had forecasts today which were slightly positive, but I decided to take a long on the pound US off of yesterday's negative news here, looking for a pullback into propulsion and a bounce, and that's exactly what we got. So I just took it there in case it continued to rally. So target is up in propulsion. When this news comes out, it's either going to do one or two things. It's going to go up to target, or it's going to go against me, and I need to leave the EA on, because if we get a push down of an ADR or 125 ADR on the news today, the EA's got to be able to take my second entry. So I can't turn the EA off just because it's a news event. It's going to help me. It's either going to hit my target or it's going to move me to a position to take a second entry. So always leave it on. I'm not one of these people that advocates, so many people always contact me, but it's mainly to do with all these other EA sellers out there that say, oh, turn it off at the news because it might screw it up. How is it going to screw it up? We only can make money when the market moves. If the market doesn't move, you don't make money. So news is what drives the market. So I've never understood the theory of I'm not going to trade around the news because it might be volatile. Really? How are you going to make money? It just doesn't make sense. Or I want the nice grindy moves. Good luck with that. Anyway, 25 minutes. Just going to quickly run through these weeklies. Aussie dollar yen. I'm in long on this at the moment. It's stuck again today. We've had a lovely bounce off of the weekly. So this is the 2-week low here. This old propulsion gap. We hit it today, bounced, we hit it, bounced, we hit it, bounced. So it's bouncing nicely. I took second entry today on this one. Hasn't obviously gone anywhere yet, so average is nice and close. Target's all the way up there. Obviously, that isn't valid anymore. So moving my target down. Unlikely to get that one either, but we'll see where we go. So that is a weekly range hit. So obviously that move is your weekly range. So it's exhausted on the weekly. CAD yen, same thing, exhausted on the weekly. So there's an opportunity to go long there. Again, we've just tapped ourselves out the lows of this range into this propulsion gap there. That is what's been holding. So probably going to hold again, but we'll have to wait and see. So that's a nice extension to the downside. But obviously you can see the weekly range is massively contracted. It's only 114 because for more than 10 days, we haven't been doing anything. So this weekly range that we've got, or this average daily range at the moment we've got of 114 is hugely contracted on normal ADRs. So just be a little careful with that. It was massively expanded because of the intervention, and now it's massively contracted. So it's a little bit of a difficult one to really get your head around all these yens at the moment. This move is the biggest thing we've had for weeks over the last 2 days. And it's all coming down into range lows. So technically, there's lots of levels which are coming ripe. We're extended on RSIs. We've hit weekly ranges. So all of these are good long opportunities for mean reversion, at least 50% of a retracement, if not back up to the top of that range. But just take one if you're not in it. Euro yen is the same. Euro yen's pushed into propulsion. So we've broken a little bit lower on that one into propulsion. That's now filled. So there's just upside targets galore. We've also got 2 minutes to the open. Pound yen, it's all yens, isn't it, basically? Yeah, it's all the yens, basically. Every single yen is weekly range hit, and it's only 100% of its weekly range. So it's not super extended, but RSIs will give you the same signal, basically. A lot of the times when you get these weekly ranges, you'll also have RSI extensions on the hourlies and the 4 hourlies, obviously. So it's the same thing. It's a big, strong push. We're looking for a mean reversion on it. So push back up into there. Nice weekly. Beautiful weekly bounce on the pound yen. That's pretty much the same as my Aussie yen trade, isn't it? My Aussie yen is doing the same thing today. So we'll see where we go. The news, the PMIs will probably move the yen as well. So US dollar yen, that one's broken down a little bit further. So you've got a nice monthly level coming up. Last month's low, which is 125 ADR. So if we get negative services PMIs, there's a good opportunity for a long. Sorry, I've got a really itchy nose. This mic, every now and again, this mic, I think, just irritates my nose for some reason. Don't know why. So there you go. So there's your weeklies. Nothing's hit monthlies yet. We're on the 5th of the month. So it's not surprising we haven't hit any monthly ranges. I suspect the yens will probably be the first to get there. So I haven't banked anything today. I've got an opportunity to bank the pound US, but I'm going to wait for the news, see if we get some negative US news. If we do, then that's going to bank 0.5%. Other than that, really stuck in everything at the minute. And I haven't found anything new to get into. Euro pound, I've been in obviously for a few weeks, and we've literally gone nowhere all week or last week, really. I mean, we're sitting on 1, 2, 3, 4, 5, 6, 7 days now, totally sideways. So I can't do anything with that. Euro New Zealand. That's pushed up. I had an exit on that this morning in the Asian session, unfortunately, while I was asleep. I probably would have taken that because I've already taken part of that off. But yeah, not gone anywhere far enough today. And obviously it's pushed down, unfortunately. So, and Aussie yen we know about, I've already looked at. So markets open. NASDAQ, why is the NASDAQ not drawn any lines? Weird. Just not drawing any lines for some reason. Seems to have drawn the lines on the S&P, which is turned off, but not on the Nasdaq. Weird. So long on the Dow. The range on the Nasdaq's too small today, 352. So the pre-market range there is just shy of 10%. So it's 3 points short of 10%, which is the minimum range I want to see. So we'll be taking the opening range break on the NAS instead of the pre-market, but already gone pre-market on the Dow. If you are trading the S&P, you'll be pre-market on that as well. So there's your 80 range. Nice M pattern forming on that New Zealand dollar CAD. So you are just about to get a reversal alert on that, potentially on this candle. And then off we go from 125 ADR. Morning, Mayor. Bogdan. It did not for me too. I don't know why that's not drawn. That's very odd. Hedged on the Dow. I've never seen it. I've never seen it not draw the lines in. Don't know why. Maybe it's just not feeling very artistic this morning. We had some decent breaks today. So banked 395 on the FTSE. So that was the pre-market range. We pushed down at the open, didn't get triggered on the short, came back up, triggered the long. TP1, I took off at 2R. TP2, I took off at 3R. And then we just flip-flopped around up to 5R. So it did make 5R today, but then obviously it came all the way back down again. The DAX, I got hedged on. So decided to exit my hedges on the DAX with a 287 loss. So on the morning, 287 down on the DAX, but 395 up on the FTSE. So cleared 100 this morning. So one nice clean break and one hedge. Just got hedged on that. Like that was the opening range candle there. So that was my entry. Obviously just got hedged on it, unfortunately. Otherwise that would have been a clean break as well. So it would have been a nice double clean break day today, but didn't quite get it. Whoa, big move on the Dow. Blimey. 3-hour break to the downside on the Dow. Didn't cover this morning's news. So not really an awful lot else this morning to look at. Huawei, that's not really a problem. Oh yeah, we had Barnier elected this morning as French PM. He was the guy that we were dealing with Brexit. Other than that, not an awful lot really this morning from a news perspective. So yeah, nothing. That's why I didn't really cover the news, because there was nothing much else to report from this morning. It was all dead. So 3 o'clock is next news, which is our services PMIs. Okay, so there we go. So we're drawing in now the opening range, long on the Nasdaq. I'm using Forex. Didn't draw it on Forex either. Yeah, I don't know why. So it's obviously something to do with the EA. Not quite sure exactly. There's something to do with what the calculation has been today on the pre-market range, I suspect. But I don't know. That's a weird one. But anyway, 5-minute ORB. is in play. So long on that. Not quite sure what to do with this Dow today. So we got a 2-week low on the Dow there. Last week's low and yesterday's low and the previous day's low all at the same level there. So that's where we tested as well before the close yesterday. So this area here from this black line down to yesterday's low is the obvious spot to look at to the downside. So that's yesterday's low. That's last week's. So my 5R target is there. So that's where I'll be looking to be a buyer today and get out of the shorts. We've got another weekly level there to back it up as well. So if we can get a run down to 5R, I'll start to look for exits. That's a big break. 3R, look at that. That's actually a massive candle. So that obviously has hit 3R to the downside, adding that onto the opening range as well. I mean, that whole range there on that opening candle is... I can't see because I've drawn a stupid line. Whoa. Just move my target out the way a minute. That's coming down really fast today. So that whole range there is 20 points. So that's half an ADR. We put half of an ADR in the first 5-minute ORB today. So massive volatility today. Nasdaq's gone long. So upside on the Nas. Watch this Globex high, which is where we are right now. So this is the pre-market high here, which we're just tapping into at 1R. So watch that for signs of resistance. If it breaks that, we should come and test yesterday's high. So just testing pre-market now. See where we go from there. 4R on the Dow. So we're through the weekly low. So yesterday's low and the previous day's low is that propulsion gap. So I will be considering an exit down there. Didn't draw for me either on Robo, Abdul. Yeah, I don't know what it is today. There's obviously something to do with the calculation. I can't think what it would be though. I don't know. It wasn't exactly an odd calculation this morning either. It was just not quite bigger than the normal range. Magic numbers are unique, so it's not that. Weird. Don't know what it is today. Just didn't want to be arty today, did it? Which is fine. The lines aren't actually that important. It's just they're just drawn in for reference, really. But the calculations and the trades and everything has nothing to do with the lines, so it doesn't matter if they're there or not. Okay, so pre-market high is held at the open. So we've rejected at the moment the pre-market high. If we slam through today at that opening, the second 5-minute candle, we'll probably come to test the highs. So we'll see if we can get through there. Everything else seems to be rejecting on the S&P as well. Dow is still dropping. That's a hell of a range today. I get the feeling we might be sitting around now waiting until 3 o'clock, but we'll see. Can you explain what a 3-bar reversal is? I always hear you talking about it. I can. Afternoon, Crom. Let me just quickly watch what's going on with this. Just getting rejected. 190.49. Okay. Not really going very far. So three bar reversal basically is just a 3-bar reversal. It's funny. It's a 3-bar reversal pattern. Basically, best time frame is either H4 or daily. There's one there. That one failed, but that is a 3-bar reversal. So there's 2 3-bar reversals on here. There's multiple ways. Basically, a 3-bar pattern is more reliable than a 2-bar pattern, which is more reliable than a 1-bar pattern. So when you're reading price action, obviously 1-bar patterns there's not a lot you can have with a 1-bar pattern. It's a hammer, a shooting star, a doji, or a spinning top. Basically, those are 1-bar patterns. Yeah. So candlesticks can either end up bullish, bearish, or as indecision. There is only 3 ways the market can go. It can go, I don't want to go anywhere, like a spinning top or a doji. It can be bullish or it can be bearish. That's bearish, although it could be a bull candle. And that's bullish, although it could be a bear candle. 2-bar patterns obviously are things like bearish engulfings, bullish engulfings, and I've drawn one there, an outside bar and an inside bar. Yeah. And again, it's the same thing. Bearish engulfing is bearish pattern, bullish engulfing is a bullish pattern. An inside bar and an outside bar are indecision. Market couldn't decide whether it wanted to go long or wanted to go short. 3-bar reversal is an indication of control being taken by the other party. So you have a move up, then you have an indecision, which is basically the guys that just moved up losing the battle, but the guys that want it to come down not winning the battle. And then the next candle, if it's bearish, is the 3-bar reversal. So this one here is a good example. You've got a push down, you've got a pause, and then you've got a push up. So that is the bears rallying and continuing their rally down. And these should always be at the end of a pattern. So that middle bar there will always be the high or the low of the day. Yeah, that's the important thing to remember with reversal patterns. They appear at the top of a run. If you see a 3-bar reversal in the middle of a move there, for example, yeah. So you got a down, a pause, and a push. This happened to be over a weekend, but that is not at the end of that run, and it's not at a high. It's just a pattern that's appearing in the middle of movement. Yeah. So it should be appearing at the top or the bottom. There you go. There's one there. So there's a push up, a pause, and a pull. There's a pull, a pause, and a push up. Yeah. So it's a 3-bar reversal followed by a 3-bar reversal, which is a range, basically, at the end of the day. So they're just a indication, like any other, of a party taking control. There's not really any really good examples of them, of one that works on these charts. That one, they're just not very good. These, it's a bit choppy. All these charts I'm looking at are really choppy. Just trying to find a good one. You can't find one. There's one there. Not a great one, but push down, pause, push up. Yeah, market floods away. Yeah, this one we've got right now. Yeah, so this is a good example of a formation that is forming. Push up, pause. At the moment, with 3¼ hours left, this candle looks bullish. If this candle closes like that, with a wick like that, that will be a 3-bar reversal. You've always got to wait for the candlestick to close. There's a good example there of a bullish 3-bar reversal or a bearish 3-bar reversal. That pause, they tried to take control. They didn't win. They tried to remain in control. They didn't win. They took control. Market flooded away. So there's a million ways you can see them. But basically it is the guys in charge running out of steam and the other guys taking it back. Within a 3-bar reversal, which is why I love them so much, you're going to find an M pattern reversal on a lower time frame. So if you look at a 3-bar reversal, that one's probably absolutely perfect. And then you switch down a time frame, or two. No, it's not one there. Price action's not quite right. We need a kind of more recent one, really. But in there, you're going to find a reversal pattern. Yeah, it's not very clean, that one. It's actually there. Yeah. So there's your W pattern, which always appears within a 3-bar reversal. So this is why they're good on high time frames. If you see a 3-bar reversal on a daily time frame or a 4-hourly time frame, it means that either on an hourly or a 15-minute chart, you'll have had a reversal alert. So you'll have had one of those. And there's a 3-bar reversal as well on a low time frame. But the lower the time frame you go, the less reliable they are. There's also other formations you can have, which are 3-bar patterns. What was I on a minute ago? Aussie yen, wasn't it? Because I saw a really good, wasn't that one? There's a fairly good one down there. Look. Yeah, it doesn't matter what the size is either. And it doesn't matter if that wick is lower than that one. If it's lower than that one and it's an outside bar on the previous, even better, because that's even more bullishness coming through. But if you see these, one of the ways you can use these for scalping as well is when you spot them on this time frame, drop down onto, and you'll usually find that this candlestick, the bull candlestick, will have a wick. Yeah. So if you drop down and take a break of that high on the next 4-hour candle, you can ride that, and that's just a quick scalp. And if it doesn't hold and it doesn't become a big reversal, doesn't matter. You can take a quick scalp using it. So they're really good patterns to use, but they are much, much more reliable on the higher time frames. That's an end of month 3-bar reversal. Look, sold off for a good week after that, didn't it? 2 weeks. But they don't always work, same as everything. There's another example there. Push down, pause. Doesn't have to be, again, I've tried to build EAs to test 3-bar reversals, and I have done it, but there are a million combinations of, when you're doing any kind of algorithmic programming, you have to determine exact rules that the EA will use to make a decision. Yeah, so that there is not a classic 3-bar reversal. A classic 3-bar reversal would be a bull candle with a wick, a indecision candle, which is either going to be a doji or a spinning top, and there will be a wick of at least 25% there and 25% there. So that spinning top portion, the body, wouldn't be more than 50% of the candle. And then there would be a bearish engulfing, which would close lower than the low of the previous candle. It could have a higher high, doesn't matter, it's an outside bar, but it is closing bearish. But it could be a spinning top, a doji, it could have more candle up there than down there, and then that one, see, like this one here, this is a bearish candle followed by a bearish candle followed by a bullish candle. But that is, although it's still a bearish candle, it's still an indecision candle. There's a big wick on the bottom, there's a big wick on the, well, small wick on the top, small wick on the bottom, and then the bulls took control. Yeah, if that candle there had been bearish, it would have been a 3-bar reversal in the opposite direction. But you wouldn't take a bearish 3-bar reversal at the bottom. You're looking for retracements, aren't you? So, but you can use them anywhere. They will work in the middle of ranges, and then you get other rules. You've got to put rules in place that says if you've got a whacking great wick that long, and it engulfs not only the 2 bars before it, but pretty much a week before it, you ignore it. There's 1,000 rules you have to program, and it's not until you build the model and then you watch it trade, you go, no, I've got to take that out. No, I've got to take that out. Oh, you shouldn't have done that. And before you know it, you've programmed 1,000 variations of it, and it's almost impossible to automate because it's very discretionary. But it's a reversal. But all it's doing is it's showing you that on the lower time frame, you've just had a reversal alert. But a proper reversal alert, if you like. So this is a horrible reversal. Yeah. A proper reversal, a lovely clean reversal, would be that. So you have a push down, they would push up, not be able to contain that move, some kind of pause, and then the bulls take control. So there's your bull candle, there's your bear candle, and there's your pause. Everything is repeated on the same on all time frames in a slightly different way. But the lower the time frame you go, the less reliable everything becomes. Like that there is kind of a 3-bar reversal. It's not very pretty, didn't work out, but that was also a reversal alert. Look. Yeah, that's when the market took control. It's just retested it, gone long. News is out in 8 minutes. Nasdaq stalled out. Dow also stalled out. So we're basically going to sit here now for the next 8 minutes and wait until the news, 3 o'clock, services PMIs. So we're probably just going to sit here and hover for a bit. So I'll be watching these lows down here on the Dow. I've just moved my TPs a little bit further out because obviously we've got news coming. What I don't want to do is get out of trades if we're going to spike massively on the news. So I'm just going to move them down below that weekly low. Actually, I'll move them down to that weekly low because that is probably where, if we are going to find some limit orders which will stop the news move, that is probably where we'll find them. But I will be watching this level here when the news comes out. If anybody's got any other pairs they want to look at, let me know. Nasdaq's pushing again. Football edits. I've been a fan of yours since 2022. That's very good. A fan? Do I really have fans? Should I start doing autographs? If you want to send me your t-shirts in the post, I will quite happily autograph them. Currently only in euro pound longs, yeah. I'm hedged on the pound at the moment because obviously I've taken the pound US long. I've taken the pound US long on the weight of the US dollar hopefully being weak rather than strengthen the pound. But the euro pound, I've got a horrible feeling about this one. I just don't like this price action. I love the fact that it's a rounding bottom. And we are making higher lows. Yeah, so we've got the reversal alert there. There's your reversal alert and your retest. Higher high. We double bottomed. Double topped. Higher low. Double top. Double top. Higher low, which is an ascending wedge, which is a bullish breakout pattern. So it's looking good technically. But we've got no news until next week. So it looks like the bulls are squeezing the shorts, but they're really not able to get through. So this is one of those trades where, although I've been in it for a week, it's one that if I get to break even on it, I'll just get out because it's just not working, is it? RSIs are reset and hovering around 50. So the initial trade idea is completely invalidated. It's just unable to get out of it because it's not moving. Unfortunately, you can't do anything if they put the brakes on. New high in the day on the Nasdaq. Just. So if we are going to hold this long break, I mean, obviously this is all going to change in 5 minutes because when the news comes out, this thing's just going to go in the opposite direction to the US dollar. But we will probably find orders sitting at that high there. So just going to move TP1 down underneath yesterday's high, just so that it gets taken out, obviously, if it does get there. But I'm Look at this. What a mess. Just messy price action, isn't it, at the moment? Not interested in putting any orders in the market until that news is out. New Zealand dollar CAD stalled out as well. How's about CAD yen? It's just not going anywhere, is it? This is 3 weeks. So 3 weeks, 3.5 weeks, basically after that propulsion move, we haven't gone anywhere for 3 weeks. This is week 4. We've broken the lows back into the propulsion move, which if they want to remain long, they will rebuy. So it's extended on the 4-hour. You're extended on the hourly this morning as well. Bullish divergence. Lovely example of bullish divergence. Oh, that's terrible drawing. Yeah. So RSI is ascending, so the relative strength of the pair is stronger, getting stronger and stronger, yet price is making new lows, which means that there's pressure building by the bulls. So bullish divergence, good confluence. But we'll find out this will all go in 3 minutes when the services PMIs come out. As we saw from the PMIs yesterday, or was it Wednesday? When was the PMIs? Tuesday? Wednesday, yesterday. Tuesday. So manufacturing PMIs on Tuesday came out as forecast. Yen went nuts, didn't it? So that was your PMIs on Tuesday. So we'll see where we go. But don't forget, all these yen pairs are extended on the weekly. You've got bullish divergence out of propulsion. They've struggled to get through this level. They are getting through, but they're struggling. It's running out of steam. There's no good propulsion gaps on it to the upside. It's just really hard to read the yen at the minute. It's a mystery. New highs on the NASDAQ. So I think I'm going to got 50 seconds before the news comes out. I think I'm just going to close half ahead of the news, and then we'll see what happens. I'll either get taken out in the second half or not. So I've got 180 banked. I've got a 360 hedge locked in. So at least that deals with half that hedge. And then we'll see how it reacts at yesterday's highs. So 20 seconds to the news. So I'd love to see some bearish numbers because that will rally pound US dollar up to target, and it will also rally the NASDAQ. Hopefully. Bullish. Great. NASDAQ's rallying anyway. So the number's bullish. That's yes, 51.5. So it's basically forecast. That this final services is slightly up, but the final services is it's the S&P, isn't it? Yeah, that's the S&P variant. The ISM is the main body that we pay attention to. The S&P ones are less important. So, as expected. So we probably won't get too much movement off of that. NASDAQ's off to the highs. Little bit of strength coming through in the Canadian as well. The CAD strengthening a little bit. So may well get some pushback on that, but not really going anywhere. Not big news, unfortunately. So Nasdaq's testing yesterday's high. Just getting ready to close out yesterday's high because that has now got £450 profit. There's a 330 hedge locked in, so locked in 100 and something this morning. I'm locking at 100 and something this afternoon. Not very big profit, but it's profit. Okay, we're running into some limit orders up here. We're not getting any further on the NAS at the minute. If we do break that high, though, we were talking yesterday about clear air. Yeah. If we break that high, that is your next resistance. You've got potentially wicks here, and you've got this weekly level, which is that high. So as soon as that weekly level is broken, which is yesterday's high, there is nothing to stop this driving 150 ADR up to there apart from these two little wicks. So 125 to 150 ADR would be target today. Plenty of room. So there's clear air here. But it's got to get through that level. So, and it's struggling at the minute. Dow's pulling back up to retest the open. New Zealand dollar CAD's broken down. I should swap these round, shouldn't I? Because I'm not trading the S&P at the moment, so I should really put the Nasdaq over there. And we'll do that. Not right this second, but we'll do that. I'm closing it. So we're struggling here. You can see the market S&P has screamed through. The Dow is screaming up. The Nasdaq is. You can see by the price action on the Nasdaq, this thing is hitting limit orders. You can see it's hitting limit orders because it's just moving. It's ticking, 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 ticking. So basically, there's a bucket of orders sitting here, iceberg order, which is basically absorbing every single buy order. So we've screamed up, and every single buy order being executed now is being absorbed by whoever is sitting here at the highs, selling the highs of yesterday. Can't get through it. Eventually, everybody that's buying this level over and over and over again will run out of steam. They'll give up. They'll exit their positions, which makes them sellers. And then whoever's got that iceberg there will just drive it back down again. Or the iceberg will run out of orders and it will pop. And then it will just retrace and off we go. But as you can see, buyers look like they're giving up. So that's why I've exited it, because we're not making any progress. You can see from the other indices, they're not having a problem. But someone is holding the Nasdaq at that level. Doesn't mean you won't get through it. It just means it's going to be hard. So, you know, I am one of these buyers that is knocking on this door. I'd rather exit than take a profit down here. For me personally today, that's why I'm 448 up there. I'm 340 locked in there. So that guarantees me £100 profit for the session. Or I could risk it breaking through and taking a break even on the session. I'd rather take the profit. S&P trying to make new highs on the day. Dow. I mean, obviously, we're just painting a whacking great inside bar at the moment on the Dow. So if it does break that high, we're going to run into yesterday's high, which is going to be the same problem that they're going to have here. Other than that, it's that propulsion gap, and that is ADR. So I'm just going to move the target down to yesterday's high on the Dow. So if we do turn tail and run long this afternoon, I'll exit yesterday's high and try and get out on a pullback. Downside, now I know we've put in momentum long, I will go back to yesterday's low. So those are the targets. So just over 2R to the upside and 5R to the downside. They're through on the NASDAQ. Well, not through yet. New high of the day gone in. Again, you can see this is all being absorbed. Great sort of price action lesson in wicks. Wicks are incredibly important because wicks tell you who is in control of the market. So that's a whacking great bull candle there, but 50% of the price action there is bears holding that bull move in place. The bears have tried to push back again. The bulls have rallied again, but again, they're being held in place. So as soon as you start seeing wicks to the upside constantly being drawn, you know there's an iceberg order there. And whoever it is, which institution it is, or multiple institutions who are holding that level, are basically short from yesterday. They're not letting you through. So you go short. Where you go is obviously down to where the next batch of potential buyers come through. We know there's a lot of buyers in the market today, but wicks are incredibly important. Same with those three bar reversals we were looking at on higher time frames. So when you see wicks to the downside like this, yeah, so that's a sign of bears in control but starting to meet resistance. That's a sign of the bears trying to remain in control but bulls pushing back. That's a sign of the bears trying to overwhelm again, bulls pushing back. Bears have had 3 hours to try and break that level. They're not getting through. Pop. Yeah. Doesn't mean it's going to do that. Just means we can't get through that level. So you've then got a 50-50 chance of that trade becoming a W pattern reversal in this case, or in this case it just went sideways for ages, but becoming a W pattern reversal and working out as a trade, or becoming a W pattern like that, you getting stopped out if you're using stops, or it just becoming a pullback in market structure, which you can never tell. So this is the problem with trading, isn't it? If that's the hard right edge, what happens after that could be one of 3 incidents. It's either going to go your way, it's going to go your way without you, or it's not going to go your way. Nobody knows which it's going to be. It's going to be one of those 3. That's not help euro pound either, is it? So there you go. The clear indication sellers are in control at yesterday's high. So if you want to short that now, can't really go far wrong with that sort of trade. And obviously it's invalid above that high. So got a previous weekly level, you got yesterday's high, and obviously they sold yesterday's high because the weekly level held, and today they don't want to let it through either. And what's this turning into? Good lesson day today, isn't it? David, I've been a fan of Lee since 2022 as well. For all of his indicators and EAs, watched so many lives, and contributed to the channel 20 times. Have you really? Wow. Thank you very much, David. That's 20 times, have you? Blimey. It's nice to get paid every now and again. I hope I provide educational content that is worth £20, 20 times of a donation. I have finally been using the ORBEA question. If the stop at negative amount is set to minus 300, read the manual. I haven't used it for ages. I don't know the answer to that. If the stop is negative, a stop at negative is set to minus 300, but the account is 1,000 equity from other EA. Will it still trade okay? I don't know. I haven't used the ORB for absolutely ages. So that's one for the manual and strategy tester. Test it. I've just got in short on that on this terminal. This is one of the things about trading that is impossible to replicate, which is you basically. So, it's very hard, and I have tried to teach an EA to identify this. Yeah. So again, the same problem as I had trying to teach an EA to do a 3-bar reversal. A wick into a weekly level, followed by a wick into a weekly level. But that wick is higher than that wick. So you need an instance where that wick is higher than that wick is the same as that wick, and that wick is lower than that wick. You also need to say whether that should be a bullish candle or a bearish candle. You need to see how big that wick should be in comparison to the body of that wick. And sometimes it will push through it and it will retrace. Sometimes it will push through it and then it will put a bearish move in after it. But it's still the same thing happening. The iceberg is at this level and it's not a line in the sand. It's an area. So trying to spot and identify this in any kind of logical or mechanical way is incredibly difficult to program because there are too many variations. Like I keep saying, this exact pattern here, if you go and look at another chart, you will find it very difficult to find a body exactly that size, a wick exactly that size, followed by a wick exactly that size with a body that size and a wick that size, followed by this candle, whatever it's going to turn out to be. That wick isn't great because it's longer. Now, if that wick turns out to be shorter than the body, that's a good sign. If that wick is longer than the body, it's a bad sign, but it's still a 3-bar reversal. This is where back testing becomes virtually impossible with price action because there's too many variations of it. You can teach it about this. Single bar patterns. I've tested single bar patterns a million times. They do not work on any time frame. They do work sometimes, but the thing that doesn't work is what happens afterwards, because you might get a run up for a week and then the final 4-hour candle is that, followed by 2 4-hour candles coming down. And then the new week starts. And on that Monday, there's a news event. And that news event changes the fundamental bias of the instrument. And it goes like that. That has worked. But it failed, the trade, because of fundamental news. Nothing to do with the candlestick pattern. And again, this is stuff that this is why I say you've got to have a trader in charge of any EAs that you're using, because the trader needs to make educated decisions. I got out of the NASDAQ here today because of everything I've just spoken about. The EA has a target there. Well, that's where the target was. Yeah. So the EA, for me, trailing stop would have been up at 2R now, up here. So the EA would have got me out there. Fine, still a profit. But I got more profit because you're watching what's going on the chart and understanding what the price action is doing. And hopefully that collapses now because I've got a short on it. So that's really all I've got for you today. I'm flat on everything here apart from the Dow. The Dow is paid for. So 440 bank there, 330 locked in there. So there's £110 profit there. Dow and FTSE this morning were also a profit. So that's all good. Just going to swap these over while I remember. Because I'm not trading the S&P at the moment. I'm not really planning to either because it's too much confluence with the NAS at the minute. There you go. It's much easier to see, and those are the ones we concentrate on. So yeah, so there's nothing in FX at the moment of really any interest that I can see. We're really struggling this week to make any progress on much but the yen. So we've had a fair bit of Canadian movement this week. We've had a fair bit of Swiss movement this week, but it's not really gone anywhere. Nothing. It's moved intraday, but we've not really gone anywhere this week. We are just kind of flip-flopping on everything. So the yen is the only thing that's really had any progress, which is obviously strength at the moment. So there are mean reversion opportunities on the yen, which I'm on one. But I'm not really interested in trading much yen at the moment, so I'm going to stick to just the one. That's a beautiful rejection there. That reversal alert on the hourly, if that triggers, is a double W, if that's even a thing. So lovely looking long opportunity there out of propulsion. But yeah, there's nothing much else happening this week at the minute. As you can see, we're on Thursday, Wednesday, Tuesday, Monday. There's your open, and that's where we are. We're stuck. So it's just a sit around a week this week. Next week is officially the first week back from summer trading. So we will hopefully start to get a load of movement. We've got non-farm payroll tomorrow. So hopefully we get something kicking off with non-farm tomorrow, which will actually move the market on the US. So we've got expected a 0.5% drop now on the US dollar coming on the 18th. So in theory, we should be selling the US dollar. We've already been selling it for a couple of weeks. This week is kind of the pullback week. So I think we're probably going to find a move against the US dollar coming up. But NAS is pushing back up a little bit. Yeah, we're very stuck this week. Did check the manual, but could not get answer for that question. Not sure how to replicate the problem. Problem? What's the problem? Question: if the stop is negative amount is set to minus 300, but the account is minus 1,000 from other EA, right? So if you've used another EA to go negative, I don't know if it just takes the EA's magic number into account. I can't remember how I programmed it. You'll have to try it. You'll have to test it. If it's an occurrence you can very rarely replicate, it's probably not a problem. If it's got an open position in negative taken by another trade, another system or another EA or something, it shouldn't affect it. I don't think so. I think it works on magic numbers. Or does it take account balance? I don't know. I'd have to check the code, but you can test it by when you get to that occurrence, see if it works or not. And if it doesn't, use another account. You should always run one strategy per account, ideally. If you've got other EAs running on the same account, you are going to come across problems. Also, you're not going to know what's making you money and what's not. So if you're running multiple strategies on the same trading account, you are complicating your analysis of whether or not you're profitable with a strategy. So this account does nothing but SIH. That account does nothing but manual trades. This account does nothing but position trading. Yeah. So you just have one account that does one thing. That way you can easily see, is it working? Yes. Am I profitable? Yeah. You haven't got to question why are you profitable. And that's what so many traders fail on, is over use of strategies on the same account. Yeah, so you'll have a whacking great month where you'll suddenly make it and you'll go, ha, cracked it. Why have you cracked it? Unless you can go into a trade analyzer, open up Strategy Quant or Edge Wonk or whatever you're using for trade analysis and say, I was profitable because, you're not there yet, because you need to know why you're profitable and why you're not profitable. There's a video I've got on why I don't trade gold. I don't trade gold because I'm not profitable. The only reason I know I'm not profitable is because I've done an analysis of my trades and my gold P&L is negative. So I stop trading it. And that immediately makes me a positive trader because I'm taking that loss out of my portfolio. So I'm more profitable just by default of removing one instrument. But I only know that because I know position trading doesn't work on gold because the P&L showed a negative. So just be a bit careful mixing strategies, just from a complication point of view of being able to tell what's going on. Who is it came up with the strategy? Was it AZ? Are you still here? Using the position trader with RSI. No, with ADR 1-to-1 risk reward ratio. I can't remember who it was. I think it was AZ. I've been back testing it. So I've had one of the terminals back testing. And I've tested GU, EU, Aussie, New Zealand, US dollar yen, CAD Swiss, Euro pound, Aussie CAD, Euro odd, US CAD, New Zealand US, US Swiss, and Euro New Zealand to basically see what the robustness is like on the strategy. And it's very mixed. So be careful. It was you, yeah. So pound US dollar was the first test I ran. 70 out of 75 system parameter permutation tests were positive, which is bloody good. Doesn't matter whether you use 100. So I tested 100, 125, and 150 ADR extensions. I tested targets between 0.8 and 1.2 ADR. And I tested stops at 0.8 to 1.2. So basically the upshot is out of 75 system parameter permutations, 70 of them are profitable. So it doesn't matter if you use 100, 125 or 150 ADR extension. It doesn't matter if you put your stop at 0.8 or 1.2 and the same with your target. It all makes a profit. This is a 4-year test post-COVID. So you can see the return on drawdown ratio ranges from 2.7 all the way down to flat. So obviously one of those has an incredibly high chance of happening over the next 4 years. But the drawdown is the interesting thing. If you sort it by drawdown, the lowest drawdown is starting your drawdown control at 0.8. So all of these here, R1, are 0.8 drawdown control trigger. So you're setting your stop loss at 0.8 of ADR or 80% of the ADR. But the interesting thing is all of these, all the way down pretty much to there, are 125 or 150 ADR. So what it's basically saying is you are going to go into more drawdown if you take ADR reversals than if you take 125 and 150s. That obviously makes sense because the more extended you get, the more chance of a snapback. That's the whole theory of ADR, which is why these are plotted like 42%, 23%, 12%. So what it's saying is if you trade these two, there is only a 23% chance it's going to go further than that, which means the probability of it coming down is higher. So therefore, the trades will work more often. Therefore, you'll be in less drawdown. I wouldn't expect anything different. But remember I was saying to you about using a positive risk-reward ratio instead of a 1-to-1. This shows you that using a positive risk-reward ratio is a better thing to do. So out of all of these, so let's actually use these. So all of these are 0.8 apart from one ADR. All of these, apart from one, which is that one, which is the negative R, are above 0.8. So using 0.9 to 1.2 as a TP and using 0.8 as a stop loss. Yeah, will give you a drawdown below 10% and a positive return on investment. Not massive though. Yeah, so the return ranges from 10 grand to 20 grand. This is just using 1% 1% risk, I think I'm using. Yeah, 1% risk over an ADR. So it's positive. But obviously, that's one instrument. You're only going to make somewhere between 10 to 25 grand roughly in 4 years. So it's going to generate around about 5 grand a year, one instrument, which is not a bad thing. It's only taking a couple of hundred trades a year. So you know, it's not setting the world on fire. Euro US, which is the thing that surprised me. If your pound US is working really well with high robustness test passing rate, I would expect Euro US too. Euro US was terrible. Everything was negative return on drawdown, apart from one test. So Euro US dollar, for some reason, wasn't good. But if you look at the Euro US dollar from 2020, you can see why. Yeah, COVID killed it. Yeah, ADR reversals are going to really struggle to make any money there. Yeah, so that's COVID. Sorry, no, that's not. That's COVID. There. We had the bull run. We had the interest rate rally. It died, didn't it? The euro collapsed. They just went to pot. So that's why it didn't work. Because of that catastrophic US dollar strength that came through. When you look at the pound US dollar, it was more jagged. So you had big moves. So you would have had only a few losing trades in these big moves, but the rest of the time it was mean reverting in between them. And then we had Liz Truss, obviously. Nothing you can do about her. So it was less volatile. But the other instruments, Aussie, New Zealand, terrible. US dollar yen, not one test passed. Yeah. So on the US dollar yen, ADR reversals don't work. Why? Because it trends like crazy. Yeah. We know US dollar yen and the Swiss franc are bad for mean reversion. CAD Swiss, bad for mean reversion. Euro pound, amazing. 3.9 return on drawdown. So less than 10% drawdown, returned over 50k. So the pound is, for ADR reversals, the overall winner. Aussie dollar CAD, 72 out of 75 passed. 6.4 return on drawdown was the top, going down, obviously, but that passed 72 out of 75 tests. Euro odd, 75 out of 75, 100% robustness over 4 years. Doesn't matter what you did. You could have shut your eyes and gone, was that an ADR alert? Okay, I'll go short. You would have won. All of them, every single time. US dollar CAD, 65 out of 75. New Zealand US, 48 out of 75, not great. Swiss franc again, US Swiss, not great. Euro New Zealand, mediocre. So the upshot is it's very mixed results. Yeah, so be careful. I haven't tested these pre-COVID yet. So I wanted to get sort of 10 or so tests done post-COVID. And then I wanted to do robustness testing again on these pre-COVID. So if GU works pre-COVID 4 years and EG works pre-COVID 4 years, it's the sort of strategy you could put on anything that's robust post-COVID with, I would say, anything over 65 out of 75 tests passed, you'll probably be safe. So you're looking at something like Euro pound, pound US, Euro odd, US CAD, New Zealand US, depending on yeah, I mean, that's 1-to-1 ratio seems to be working. And that's about it. So there's only really 3 or 4 instruments that I've come out of the testing with that I would say they look good. But it needs to be tested. So I've tested from here to here. Needs to be tested there. So if the results here are similar here, that is our out of sample test. If the out of sample test is repetitive of the in sample test, it's robust. But it's not, doesn't seem to work on that many instruments. And obviously it's not going to set the world on fire, but it's something you can trade and it will be pretty damn robust. So you shouldn't get into too much trouble with it. I haven't run an individual test yet, actually. Let's test an individual instance. Could do that now, can we? So that, I want to use a positive one. Just by drawdown. This was Euro New Zealand, so this wasn't a great test. Let me just pick the parameters. So let me pick the parameters here and then change it to pound US. And do a pre-COVID, so 2016, 2020. So just going to run that and just see what the equity curve's like on GU, because this is the one that got the best results, basically. And this is a 15-minute time frame as well I'm running this on. So this is obviously low time frame. If you've got something that's profitable, low time frame over 4 years, it's bloody good. Because for low time frames, obviously we're trading chop, but we're trading intraday extended chop. So, you know, it has got an edge. So we'll see if the edge is there. But you can see how hit and miss it is. You need the market to be in a mean reversion state. So, you know, it's never going to be great here. It's going to be beautiful here. You know, any kind of market like that, it's just going to continuously make money. Well, not continuously, but it's going to make very good money. And same as this sort of stuff. Yeah, it's going to do really, really well. Just looking at pre-COVID. I mean, it should do all right. But so that didn't do very well. Look, lost 7 grand pre-COVID. Strike rate 44%. Just test the settings. %, single trade, DD control at 0.8. Yeah. So yeah, it didn't work. So it's failed pre-COVID testing. And the one I used was that. So that generated 18 grand, a 1.95 return on drawdown post-COVID. Pre-COVID, it lost 7K. So, I mean, over 8 years, it's still profitable, but can you pay the mortgage on 8 grand? Not that good, is it? So, yeah, unfortunately, I can't make it, you know, when I do robustness testing like that across multiple instruments, I want to see the vast majority of these pass robustness testing with minimum of 50% of the tests passing. And you'll usually find in the tests that you do, the 50% or so that pass are always the same thing. Doesn't matter which instrument, it will always be the 150 ADR, not the 100. It will always have a positive R rather than a negative R. So it's basically telling you using a negative R isn't profitable. Using 100 ADR isn't profitable. And if you get a 50% of the tests returning positive results and they all telling you, you don't want to do that, you want to do this, you know that's what you want to do, and it's robust. But it doesn't seem to pass. That is also using control points. So doing a tick data test on that might give slightly different results as well. But because we're testing on the 5-minute time frame, control points will be used, 15-minute time frame, control points will be using a 5-minute candle. So it's almost minute charts, which is usually pretty good. But, you know, it may just need some tweaking. I'm only testing ADR extensions, TPs, and profits. So, you know, there's all sorts of other things you can put in there, like the non-idiot factor, like I was talking about yesterday. We've got an ADR extension and non-farm payrolls coming out in an hour. Don't take that one. That's a stupid thing to do. So you remove the idiot factor, you might remove 50% of that loss. And it could be hugely profitable. Yeah, but you don't know, do you? Because you can't test all of this. Might be a potential strategy for a prop firm account where you cherry pick. Yeah. So I mean, for prop, it's a good strategy. You know, any mean reversion strategy that uses a positive R of 1 to 1.2, as long as you've got a 50% strike rate, it will work long term. But it's when you hit the losing run determines whether you pass or fail prop. That's always the way it's going to be. If you start prop on a Monday and you have a losing run, you fail. If you start prop on a Wednesday and the losing run's gone and it's nothing but winners, you pass. The strategy doesn't change, the market does. So it's a good strategy. It's a good, robust strategy. You know, it works. But I use it for position trading rather than for stop loss trading. So trying to convert. This is the problem. This is why I position trade, because this is the problem I've had for over 15 years. Nobody's managed to show me a stop loss based strategy that is consistently profitable using any kind of real automation. You have to be watching it and you have to know what you're doing. You know, there isn't anything out there that will work, that you can make it work. I can make any strategy work on a daily time frame. Yeah, on a daily time frame, you could literally pick virtually any candlestick pattern and it will work out at some point using a stop loss, because you're only going to take a few trades, and this price action is so smoothed out. It is basically guaranteed bulls, guaranteed bulls, guaranteed bulls. We're not sure, bulls, definitely bears, sell it. Yeah, that's the first signal that month, that entire month, that you had to go short. You only took one trade and it worked. I can make anything work on a daily time frame. I just can't survive taking one trade a month. That's the problem, which is where position trading comes in. We go short there. We're not quite right. Oh, well, we've timed it wrong for half the month, but let's get out. I've still only taken one trade on it, but I can trade multiple instruments in that way. Other months, it'll be a case of win, 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 win. And these are the 25% months where we bank a load of money. You know, it's just hard to convert a position trading strategy into a stop strategy. Believe me, I've tried many times. I guess it goes to show the bottom line is nothing at all beats position trading. No, it doesn't. That's why the banks do what they do. Because, you know, I keep saying the banks don't know what's coming. Yeah, it doesn't matter if you're Barclays sitting here long on the pound US dollar. If NatWest, Citibank, and HSBC are shorting this market, and you are Barclays and you're sitting here long, you are going into drawdown. But unlike retail traders, Barclays won't take a £1.5 million loss just because the market's pushed against them, because they've got the buying power to push back. We haven't. We're riding their wave. So they can ride a wave, not indefinitely, but they can ride a wave for weeks and months, which is where your commitment of traders report comes in. Yeah, the COT positioning. Yeah, they can be buying here, 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 and here, knowing that the US dollar is reducing its interest rate and we will make a new high. Yeah, but they will buy this. So will the hedge funds. So will the pension funds. But they have a pot of cash which can go very far down without getting any real impact. We haven't. We've got margin. Doesn't work that way, does it? I bet if instead of hard stops you enter a trailing stop, the results would be better. Maybe. Trailing stops, I don't think really work. If you're in that NASDAQ, if you are short NASDAQ, just coming back to the NAS quickly, we're just taking out the highs. Yeah, bears are stepping back in again. So watch this level here. I'm going to jump if it breaks back above yesterday's high. So I'm putting a stop up at 191, which is there ish. 191, basically high that candle. Yeah. So if this propulsion gap holds, because basically market structure is bullish. So if it breaks that candle, I'm out. It's only a tiny little loss. But they're having a second run up at it. You know, it's being heavily defended, this level, isn't it? But looks to me like it might get through this time. In which case, like I said, and this is again, you know, talking about what the banks do in this situation, they won't have a hard stop. They will have a stop and reverse order. So, you know, banks and institutions do not get out with a loss. They get out with a negative P&L, but they reverse. Because if they are dumping tons of cash into this market, don't forget, this is the whole thing. They know what's going on. They've just said, we've just dumped 25 million short and we've been run over. Dump another 25 million. All right, well, if we get run over again, doesn't look like we're going short, does it? Okay, we'll jump on board the 150 million that we're running into. They will flip and reverse, and they will help that move go until they get back to a break-even point. They can't lose, basically. We can. So stop and reverse order there. And if you want to do the same, you can do. You know, we were talking about stop and reverse orders the other day. But see if that propulsion gap holds, yeah? That's the battleground at the moment. If the battleground fails, we'll come and test this area. And then either they'll rebuy it because they're still long, and that will become your market structure, or they won't, and we'll get an A-shaped recovery. One of them's going to happen. If only we knew which. What do you do if there is an interest rate change news and you are already in the wrong direction? Yeah, close. I usually close a portion. So it depends on the drawdown at the end of the day. Euro yen, what's going on with euro yen? So selling off the yen. Selling off the previous move. So remember I said if you're these weekly extensions we were talking about at the beginning, yeah, this is the average weekly range. Remember I was talking about this bullish divergence? There it is. So increasing relative strength, lower lows rather, in this case, can't sustain that because there's more buying power. They're making lower highs on more buying power, so it will has to pop. That's why, you know, and this is, people use this as their sole trading strategy. I've tried it. It doesn't work. It's great for confluence. And why did I take the Aussie yen? Because there's a weekly low. Where do banks and institutions place orders? At weekly lows. What have we done? Bounced off the weekly low 3 times, which is a previous propulsion order, which is their buys they've added to twice. It's also got bullish divergence, but I didn't take it because of the bullish divergence. I took it because that's where the banks bought it from. Yeah, but it all adds up. We were talking again the other day, weren't we, about, you know, A, B, and C trades. Yeah, that is an A setup. Yeah, we've got a weekly level. We've got a propulsion gap. We've got a retest of the weekly level, sorry, the propulsion gap prior. We're in a range. We've tested it. We've got a weekly range extension. We're beyond the weekly range. We've got a support bounce iceberg order at weekly levels where we're expecting limit orders to be placed, which has been held 3 times, and bullish divergence. It's A++, really, isn't it? But try and teach that to an EA. You can't. This is a human being thing. You've got to look at it, test it, and if it doesn't work, it's not a problem. We add another position. So yeah, if I get out in the wrong direction, it all depends on what my P&L is. So if my P&L is in -3%, when the negative news comes out, I'm going to very quickly be down in -5 to 6%. Yeah, in which case I need to do something about it. So what I typically tend to do is, if it pushes against me after that situation, I will do aggressive drawdown control at a decent level like that. So I would, rather than put a normal position in, I would use 75% of my total lot size on one big order with a stop loss, which becomes an aggressive drawdown control. Nasdaq's coming back down again. That would be my first thing. If that aggressive drawdown control fails, I know that the news is going against me. I would just start to take a loss. So I'd probably close out 1 or 2% maybe, take myself back down to 3% in drawdown, and then try to get an aggressive exit. If it continues against me and fundamentally this thing looks like it's going for weeks, I'll shut it. And I've taken 6, 7, 9, 10% losses in one go, which you've probably seen in here. I've done it on oil, I've done it on Aussie New Zealand, I did it on pound US, done it on US Swiss. Every now and again you get into a squeeze which just everything happens at exactly the wrong time. So all the stars align beautifully at exactly the wrong time, and you just have to take the loss. Yeah, it's like any trading. All we're doing is we're not taking a loss every time we press a button. We're only taking a loss if we are proven really, really, really wrong for a long period of time, weeks, months. Yeah, if I'm in something for 4 to 6 weeks, I could possibly be in somewhere between 6 to 7% of drawdown on it. Yeah, if it's been going down for 4 to 6 weeks, the probability of it stopping and reversing is incredibly high, which is what we're doing, isn't it? We're scaling in. Yeah, if you scale in there as a short and you're wrong, you scale in, you wait for the market to correct, and you get out. That took 2 weeks. Sorry, that took a month and a half. We're on a daily chart. So that initial entry to that exit was a month and a half. Didn't lose any money. We just didn't make any money. That's the key. We're eliminating the losses, which makes you profitable, not trying to be better at trading or better entry pickers or higher risk reward or increasing strike rate. We're just eliminating our loss. If you can eliminate your loss, your profit becomes automatic. But sometimes it won't. And those times you have to cut it. You just have to go, nah. If euro pound from this level here breaks this low, I'm going to take a loss. And it can hurt your month, really hurt your month. But look what we've had. 1, 2, 3 weeks down. Yeah. And now we're flagging. That is potentially a move. Yeah. But also, that is a move before the interest rate change. So what we're going to see on the euro is the interest rate changing on Thursday next week. Yeah. So at that point, my decision will be taken out of my hands. They will likely drop it, which will weaken the euro. I'm long euro pound. So ideally, if I can get back to break even, which is what I said this morning when I came on stream, if I can get back to break even before Thursday, I will get out at break even. I will make a loss because I'll have held it. I'll have had swap fees, commissions, etc. I will take a tiny, 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 tiny loss. But what I won't be is in danger of going the wrong way for the next 3-6 months. Remember that chart I just showed you of what happens when the euro gets into trouble. Yeah, you do not want to be the wrong side of the euro when it goes down the pan. That's unlikely to happen because that happened because the US dollar was strengthening up at the same time. The US dollar is going to weaken, so it shouldn't do that. It should do much more of this, which will be great for us. But the euro pound, again, should be much more rangy because we're both dropping interest rates, but you just don't know. Bailey could come out and go, Euros drop their interest rates. We don't think we're ready yet, which will weaken the pound. So, you just don't know which way it's going to go. If Bailey says that we're not going to drop interest rates, so it will strengthen the pound, and it will just fly off in one direction or the other. So you don't know. Right now, the head and shoulders traders are getting ready to enter next week, which is great for me because I'll be out. But also, you've got all the double bottom traders who are longing it down here because of these lows and want to drive it up. It's totally out of your control. Nobody knows where it's going. So that Nasdaq's coming down beautifully now. Just moved stock to break even on it, which is 190.44. So there, just actually above there. It's above the high of that candle, basically, is my break even. My entry's roughly there. Again, you see the benefits of not using a stop loss. Yeah, I had no stop on that trade. The reason I haven't got a stop on that trade was because you get M pattern reversals all the time. And M pattern reversals come in three forms. That, and that. Yeah. If you get in on that, do not put an order there to lose money. Because if it does that, you're fine. If it does that, the spread could take you out. And if it does that, you've lost. I'm still in the trade. Because I didn't use one of those silly things that loses your money. But we all know that. Dow's broken down. So I'm out of my shorts on the Dow. Whoops. So out of the Dow shorts at 5R. So this is yesterday's low that we're just tapping into here. So that's my exit. And I'll be looking to buy stops all the way up there at the moment because of the size of that move. So the buy stop's going to jump down to there on this candle close in the next minute. So if it pushes up, I'll be taking second longs there, bringing the average down. Exit target is 540. I won't wait for that. I'll probably get out of this one much quicker. In fact, I'm just going to move that down because this thing could pop really quick off the lows here. So hopefully going to get out of the Dow as well. Right. I did say that's all I've got for you about an hour ago, didn't I? But I'm still here. Swiss yen's rallying as well. Pulling back. So that was a nice big bull order. You're about to get a reverse alert on that in the next 5 minutes. So we are starting to move, but we've just tapped into resistance and they've resold it. So we'll see how far we go. Don't forget we're range bound on all these, so not convinced it's going lower personally, but we'll see. Right, so back tomorrow morning at 7:45 even tomorrow. We'll trade the DAX and the FTSE. Have a look at this week, what's gone on, which isn't a lot. And obviously prepare for non-farm payroll. So ahead of obviously 1:30, I won't be trading the New York session tomorrow because this thing will be, that's the European press conference. That's next week. So this thing will obviously have moved everything at 1:30. So the market opens at 2:30. There's no point in trying to trade the US Open after they've done all the volume. So we've got the CAD unemployment and the US unemployment rate tomorrow. So those are the two main drivers. One forecast to go up, one forecast to go down. Could be a big whipsaw. So it'll be an interesting day tomorrow. Waller is speaking tomorrow afternoon as well. So there's potential for more confirmation of dropping interest rates, and it'll be very much a case of if that unemployment rate is above 4.2, we get a 4.3, or worst case scenario 4.4 or above, we will have a confirmation of at least a 0.5% drop in the interest rates on the 18th of September. So potentially a big bear move on the cards tomorrow for the US dollar. If that is the case, there is potential for a big US move to the upside, index move to the upside. So triggered long on the Dow. I'm just going to close the NASDAQ out here. Sorry, NASDAQ. So that's going to take some getting used to. Here, just close that out. We just tapped into the pre-market highs. So just in case this is that, just exiting the trade there because it was a nice, quick, easy, clean trade. And also the Dow is rallying. So back in profit on the Dow. I'm not going to wait for that target. Be nice if it gave me a bit more than this, but struggling. So we may well take a second bounce off of yesterday's low. We haven't actually, we've just about tested the previous day's low with this candle. So there is more downside to yesterday's low. So I'm just going to leave that for a minute. I can re-hedge it if it breaks the lows. But that's a fair old drop. So we've got this propulsion gap obviously holding. So what I was looking for was a push up into propulsion somewhere around about here to get out. Didn't quite get it. That would give me a couple of £100 worth of profit. And that's what I'll do basically if it gets there, but wait and see. Right, so be back tomorrow. Anything you need, let me know. I'll be in Telegram or Discord. Other than that, have a good day. I'll be back tomorrow afternoon. We'll prepare for non-farm payroll stuff and just have a look through all the charts, see if there's any good setups coming after today's price action. But I suspect we won't get a massive move today because obviously we're waiting for tomorrow. So wouldn't be surprised if this just all stalls out and sits there until tomorrow afternoon. But anyway, we'll see. Thoughts on the pound CAD before I go? That's not going anywhere. It's just dead. You got a 38 retracement bounce at the moment. So hard one because you've got a double top bounce and you've got a 38 retracement. So 38 retracement is ready for an up leg. However, that could be a double top, which is just going to retrace back down and stay in the range. You'll find out tomorrow. Basically, Canadian interest rates, Canadian unemployment tomorrow. So this will be up there or down there tomorrow. So we'll have a hit up 175 ADR or a hit down to 150 ADR tomorrow. But long term, bear against a bear. So it really could go either way. It's not extended at the moment. So you should really be long unless you're short from here. In which case you would have been out there. So you should be out. If you got in there and you haven't managed to exit on that, you've missed the boat. Possibly. Maybe you haven't. But if you're long, you're in profit. You shouldn't be stuck in that, put it that way. Right, I'll leave it there. Anything you need, let me know. Otherwise, I will be back tomorrow. If not, I will see you next week. Have a good one.